So just globally, we don't really have any sort of scarcity in terms of the material in the ground, and we're able to recycle a lot of it. So, and we actually don't burn it. So there's this perception of it being the new oil, and it's probably not that simple. And it means that you're not really subject to the same sort of pinch points or vulnerabilities that you do with fossil fuels when it comes to trade, because you don't just suddenly have electricity prices spiking in France as a result of solar module imports being cut off. It doesn't quite happen in the same way as we've seen oil markets respond to much smaller fluctuations.
Clean energy isn't just a decarbonization project, it's a highly industrial one because the sheer amount of hardware required can be overwhelming. Core technologies like solar or batteries all need physical materials to be sourced, manufactured, and distributed across the world. We're talking about steel or critical minerals or electrodes, etc. And so that makes the clean energy transition highly dependent on global supply chains to put all the pieces together, especially at a cost that's comparable to fossil fuels. And that makes the clean energy transition highly vulnerable to global trade, including, you guessed it, tariffs. Okay, so last April, Trump announced aggressive tariffs on pretty much all the countries on which the US relies on for components. Then, just in February, the Supreme Court struck down those sweeping tariffs. Then, Trump imposed a 10% global tariff, even threatening to increase it to 15% under a different authority. Meanwhile, more than 1,000 companies, including FedEx and Costco, have filed lawsuits to claim back refunds for the illegal tariffs they've already paid. But experts say the legal process is opaque and could take years to resolve. Okay, real talk. This stuff is complicated, and I studied economics in graduate school, and it's still confusing. Which is why I'm so glad that we actually got a chance to talk to Antoine Vagneur-Jones, who's the head of trade and supply chains at Bloomberg NEF. NEF is Bloomberg's primary research arm, which looks into commodity markets and investment trends. In this conversation, we unpack what this all means for clean energy specifically, and he helps put into clear context the current political upheaval. Stay tuned for the full conversation, and welcome to Future in Bloom.
We're really lucky to have Antoine Vagneur-Jones with us, the head of trade and supply chain at Bloomberg NEF. Welcome.
Thank you, Steph. It's great to be here.
Climate tech companies are greatly affected by supply chain, tariffs, trade. If you were giving advice to a climate tech company about what they need to know about trade right now, what would you tell them?
So one of the things that's worth just sort of trying to follow is having scenarios in place. We're seeing all of these abrupt shifts that have real-time impacts in very dramatic ways. All the changes that we've seen with China-specific tariffs recently have had a dramatic impact on an industry that was booming in the US, and that can grind to a halt overnight. So understanding the potential risks of different tariffs and the very different ways in which they can affect the economic case behind certain technologies, which really does vary, is really important and has never been as relevant.
How does the U.S. strategy around becoming a leader in climate tech, how bad is it going to get hit by some of these trade policies and tariffs?
In your most optimistic scenario, you're not going to be seeing much in the way of new funding for clean tech factories and not much in the way of new incremental manufacturing capacity happening right now. Already what we've seen is that pulling this off is difficult. And pulling off industrial strategy takes time. And this isn't just a US thing. In the EU, for example, there's a bit of a refocus towards defense spending over other priorities. The market conditions that we've got, whether it's the solar sector, whether it's with electric vehicles, whether it's with batteries, mean that even when you have something as ambitious and supportive as the industrial policies that were brought to bear by Biden, it's still quite tough. And we were still seeing delays, cancellations, plans being shrunk down, in some cases bankruptcies. Manufacturing is a really tough business. And there's a lot of optimism and growth. But when the growth rate of, EV demand starts to even slow, even if it's still growing at a rapid clip, it slows slightly, then that jeopardizes all kinds of battery cell manufacturing facilities that were out there. Or when we see even though the US has this wall of tariffs already existing for the solar sector, which makes, solar module prices 3 times higher than the rest of the world, when you have the kind of pressure on prices that we're seeing globally, then that does threaten a lot of the module factories that were being planned.
Yeah, to finance projects, you need certainty, and policy volatility is not creating that for companies. And so when 80% of solar panels modules are manufactured in China, and, we were building out the domestic manufacturing in the United States, and that's starting to slow down or see headwinds. Where does that leave the solar industry in your mind?
If you're a manufacturer and you're trying to build the case for manufacturing in the United States, it's difficult. But in many cases, a lot of the manufacturing that you'd be building out here would rely on global supply chains and is exposed to these sort of market pressures and this pricing that we're seeing. It makes things really tough. But then on the other hand, the world is awash with extremely cheap, good quality solar modules. And that can mean that we start to see the energy transition sort of accelerate in certain regions in ways in which we didn't expect. So this can be good news if you're concerned with the global speed of the energy transition writ large. Maybe the bad news when it comes to sort of building a case for localizing manufacturing or avoiding relying on one place, which is China, which is manufacturing the vast majority of clean tech.
And which is why the U.S. imported 3.6 billion of panels from Southeast Asia to sidestep those tariffs. And those areas are starting to see more tariffs imposed. So what do you think is the next step here?
There's a really complex web of different regulations and rules, and from the Uyghur Forced Labor Prevention Act to various layers of tariffs that are sometimes waived and lifted. And it means that, U.S. developers and manufacturers spend an enormous amount of their time on and funding, in DC, or paying lawyers, or trying to navigate all this stuff, and it makes things really, really tough.
And really inefficient,
And really, really inefficient. And it's and again, I've mentioned the fact that modules in the US are 3 times more expensive than in the rest of the world, and that solar still gets built because it is still economical, but that's there are trade-offs, and they're very real. But what I'd say as well is that when it comes to this shifting of supply chains that we've seen to Southeast Asia, a lot of that manufacturing has been quite superficial. And a lot of that is quite fraught at a time when tariffs, even under the Biden administration, were getting reimposed on places like, Cambodia and Vietnam and these different geographies. And a lot of the module manufacturing started to seem like, okay, well, this isn't going to be economical in the future. So you get these Chinese manufacturers who largely invested in Southeast Asian manufacturing, thinking about places like Laos or Indonesia, and sort of continue to shift things around. But there are tensions there, and there are also tensions with, host countries, where a lot of this is basically, it's the equivalent of IKEA furniture, where it's just assembly and it's quite superficial in terms of value add. And a lot of the export revenues those countries are getting are, being generated by foreign firms. And that's something that we're seeing in the EV space, as well as in the battery space, as well as in the solar space. And where it's very easy to shift around a solar module manufacturing facility, a factory can move in 6 months. You can set up in another geography. And because of, this circumvention game, that can mean that you have a business case for doing that. At a time when we're now seeing, a lot of confusion about whether or not we're going to be seeing reciprocal, quote unquote, tariffs on the rest of the world, or continued blanket tariffs, then that suddenly means that the long-term case for expanding starts to look a lot more tricky to pull off. So a lot of solar manufacturers are having to hedge a lot of risk right now. And even for, Chinese manufacturers who have been able to navigate to an extent sort of a lot of these issues in the past, the solar industry is no stranger to trade frictions. Now is looking like a pretty difficult time to sort of navigate those waters.
And given the solar industry has been no stranger to trade friction, like you said, what are some of the lessons that we've learned from historically that we can apply to this moment?
So direct tariffs on China can lead to shuffling things around and manufacturers setting up shop in Southeast Asia, for example. Building a solar module assembly facility is much easier than building a battery cell factory. With the kind of tariffs that we're seeing on China, we could start to see some of the lithium iron phosphate battery factories that are very well suited for producing batteries for stationary storage in particular, much of that is concentrated in China. We could start to see that, cropping up in different parts of the world. And what we're also seeing is a recognition by, on the part of host governments that there are very different propositions involved when a manufacturer is saying we want to set up shop domestically and we want to start, cranking out electric vehicles or batteries or solar modules, how much value add that's actually bringing and what the kind of technology transfer that involves and the degree to which that could then translate into a local supply chain and more sort of indirect employment as a result of that one facility is something that can vary enormously. And now what we're seeing is, from Brazil to Thailand, we're seeing governments that are a lot more clued up on this and a lot more conscious and, maybe demanding of the kind of manufacturing FDI sort of they're willing to host.
And if you look at the renaissance in manufacturing, for example, in the United States, we're just now in real time in the last few months starting to see that curve that went up and up and up over the last few years start to drop.
Yeah, so August 2022, big historic month in the history of climate with the Inflation Reduction Act in the US of this big industrial renaissance that was supposed to happen. Lots of federal funding, tax credits, grants, loan guarantees, loans, which birthed over $110 billion of factories. Lots of announcements, and making good on those announcements is difficult. But with the climate of volatility that we're seeing now, that's deterring a lot of investment decisions and even progress on some of these investments. When you have blanket tariffs and when you have manufacturing facilities, many of which are downstream, making battery packs and cells rather than cathodes and anodes, making solar modules and assembling them rather than making solar cells or ingots or wafers, then applying a blanket tariff to all of your inputs and components hurts your business case and makes it even harder to, develop what is in the United States still an infant industry.
And you mentioned headwinds and getting some of these, over 300 manufacturing facilities that were announced after the Inflation Reduction Act passed in August of 2022, seeing headwinds and being harder to develop than they thought. Can you talk about some of those challenges and what could be solutions to?
Yeah, there's slackening demand growth for electric vehicles, for example. There's very challenging market conditions characterized by oversupply in the solar space, for example. And there's also a lot of, market entrants who don't have an awful lot of experience. For example, there's a Swedish manufacturer called Northvolt, which filed for bankruptcy a few months ago. And that was the result of, a perfect storm of the EU having extremely low tariffs, of huge investments in battery manufacturing in China, very low prices, but also a company that had scaled up very quickly with a lot of private and public financing and had maybe overextended itself and was trying to go upstream, do R&D, as well as scaling battery cell manufacturing downstream and just stretching itself too thin. And then the edifice sort of crumbled and it wasn't able to meet sort of orders that had been put through by European automakers. What's needed is, clarity on the end goal, which is often missing. The IRA didn't really have a set objective when it came to clean tech manufacturing, as was the case in the semiconductor space, for example. And where the EU sort of laid out a bit of a roadmap with what it wanted to achieve by 2030 with clean technology manufacturing, no one took those targets particularly seriously. So having those priorities clear and taken seriously in the way in which a 5-year plan might be in China is something that we're very far away from. And then putting in place the environment where you're not worrying about what happens every 4 years and you see this as something that has a political consensus around it, but you do need a real policy commitment. And there's all these historical examples of, South Korea being told by the IMF to give up and just do textile manufacturing and not to look into steel making. And against all odds, the South Korean government managed to do that over the 70s and 80s and scale things up. And it didn't make any economic sense that they were able to pull it off, but they did because of the kind of extremely specific set of policies that they rolled out over time. But are we seeing that in the EU and in the US to the same extent? Right now, we're not really seeing that, even though there has been a very concentrated bid, especially in the United States, to put together the enabling conditions to pull that off.
How much of that is geopolitics? That time period you're talking about in South Korea was a time of dictatorship. And, we're talking China, autocratic government, and in the EU and the United States, maybe floundering, but generally democratic. The highest growth rates are economically are seen in countries that have the ability to be autocratic and have top-down policies that they just drive through. So I'm curious your thoughts about the geopolitics versus the actual policy.
Geopolitics is definitely a driver of a lot of what we're seeing. So finding a societal consensus is what you need in a democracy, and that can be done, and you can have bipartisan issues where you have that being a focus over time, but at a time of extreme polarization, it is hard to, find a scenario where democracies are able to present a real good counterfactual to that view. Extreme levels of policy clarity are really difficult to pull off given how divided society is right now on climate action, on the need that we have to be investing in these technologies. And that's not just something where, the consensus is lacking in the United States. Increasingly, we're seeing a lot of this be challenged in France as well as in many other European countries, speaking of the rest of the world.
And the irony is climate should be the ultimate nonpartisan issue, right? We're talking about clean air, clean water, good jobs, low cost of energy. And yet one of the reasons why China has been such a dominant leader in implementing industrial policy around clean energy technologies is not because they talk about climate change all the time. It's just because they're making the case that it's good for economics.
Yeah. A lot of the politicians that have pushed for clean energy in Japan are on the right wing of the spectrum politically. And that's because they see autarky and self-sufficiency as important political goals. And they naturally see sort of clean energy as a way of meeting that. There's an effort that's ongoing right now in the EU to sort of reframe a lot of the clean tech manufacturing discussion in security terms. There are attempts being made to find parallels between clean tech manufacturing and self-sufficiency and, security ultimately. And actually in the framing a lot of this, we talk about, we don't talk about battery metals as much. And that framing is actually really fascinating and really interesting. There is a lot to be done in terms of finding a language through which to convey the benefits of climate action or of, achieving whatever goal it is that the policymakers sort of set out in a way which speaks to a wider demographic. And that's something where echo chambers and bubbles have had quite a nefarious effect on our ability to do that well in the climate space. I think there's a lot of maturing to be done there.
And part of it is education too. The government hasn't had a critical minerals policy in the United States. And when 60% of lithium refining capacity is in China, 85% of processing of rare earth minerals, like you said, is happening in China, controlled areas. How does the United States or other non-Chinese countries in the world start to think about their national security with regards to critical minerals?
A lot of people, policymakers, will utter, battery metals like lithium, cobalt, and nickel, and sort of talk about, neodymium and all these rare earths in the same breath as if they're the same thing when they're very different. We compare imports and exports of, across different geographies of different technologies and different goods and types of equipment. You can look at things like, you can sum up all the clean tech stuff like the solar modules and cells and the battery components and cells and the electric vehicles and plug-in hybrids and then all the grid equipment as well. You can look at transformers and cables. And then if you compare all of that as a volume to critical minerals or battery metals, they're a tiny little speck in the total. And actually increasing imports and stockpiling effectively would be a lot more cost effective and cheap than many policy makers realize. And building out refining is a completely rational objective if your objective is to achieve some degree of self-sufficiency. But it's also an industry where, just like solar manufacturing, margins are incredibly compressed and where it's really difficult to sort of enter the space without a lot of support. There hasn't been a political consensus required to get these industries going when they're really difficult, where lithium refining is really tough to pull off. And then even upstream, just societally, in whether it's in Serbia or Portugal or in the United States, like mines and any kind of new exploration and tapping into sort of what are pretty substantial reserves in some cases of some of these battery metals has proven incredibly difficult.
If you're talking to an everyday person, about those basic facts that there's a lot of misinformation about. Can you lay out the lay of the land?
We can just focus on batteries, for example. And there are different types of batteries, and they have different chemistries, including the type of metal that is used within the battery. And a lot of the batteries that are used in electric vehicles or are used by Western automakers are nickel-based, and they'll use things like nickel and cobalt, manganese in some cases, in addition to lithium. And they rely on supply chains of great complexity, whether it's high-pressure acid leaching being used to extract nickel in Indonesia, which has been the subject of a lot of environmental criticism, or cobalt, which is then refined into cobalt sulfate, but is originally mined alongside copper in the DRC, and where there's a lot of attempts to take a hard look at the fact that there's labor practices that are not deemed acceptable by a lot of the buyers of those products, of those minerals. So there's a lot of sort of perceived moral jeopardy in dealing with a lot of this stuff, but it really does vary on the kind of battery that you're using. A lot of the batteries that we're seeing now be used in electric vehicles in China are LFP batteries, and they're lithium iron, with the iron as in the ferrous metal, phosphate batteries, which don't use any nickel, which don't use any cobalt, and traditionally was sort of shunned because of the fact that they were perceived to have low energy density, but improvements over time have meant that they're actually quite competitive. And they're the primary battery type that's being used by a lot of the most successful EV manufacturers today. And actually, from one day to the next, we've not needed anywhere near as much, or we won't need, according to our forecast now that we've updated, anywhere near as much cobalt as we thought we would to begin with. Things can change quite fast, and the exact types of metal that we're using do depend on the kind of battery and its end application.
And can you talk about the overall landscape in terms of trends for our demands for critical minerals and where increasingly
absolutely.
They can come from, if not China?
Yeah, so a lot of lithium comes from Chile. Australia wants to build out Chile manufacturing extraction, as well as refining. And a lot of nickel comes from Indonesia. And I've mentioned cobalt, a lot of it's in DRC, but other places like Morocco as well. The vast majority of that is then shipped to China and then refined in China and then shipped back out. And it's very similar to the rare earth situation, where actually it's not so much about where the reserves are, it's about where the refining happens. And as I've mentioned, refining is technologically tricky and hard to get into because margins are very low. And that's why we've seen this persistent trend of having refining sort of concentrated in one place. The other issue is just on the mining side as well. Actually, now we're seeing a real excess and a surplus that sort of is expected to persist for some years. But there's still a degree of cyclicality where we are seeing that excess persist over time, which is a real problem when you're trying to make the case for building out new plants. And that's just pretty typical in a lot of mining industries, where you do just have those ebbs and you get those booms and those troughs. And it's something that's really tricky for a government to navigate, let alone a company.
And if you buy the premise that critical minerals are the new oil, in that they are a scarce resource that require extraction from natural resources in order to fuel the products we use on a daily basis, and that demand for these minerals will only increase over time as different countries develop and industrialize. If you accept that as a premise, then that explains why some of the hottest startups in climate tech are doing critical minerals refining, critical minerals exploration, battery recycling. And can you speak to the overall trend quantitatively of whether that can cover demand, or what proportion of demand we can cover through recycling and refining?
Yeah, I mean, there's this narrative that battery recycling is really hard to do, and actually we're seeing the vast majority of batteries that are being used now in China basically being recycled effectively. And so there's perception that recycling is tough. There's been a lot of improvement. And although, there's regulations coming in force in Europe, which will set mandatory performance standards for recycled content in batteries, what a lot of European policymakers don't realize is that Chinese companies are going to be able to meet those standards pretty handily. So just globally, we don't really have any sort of scarcity in terms of the material in the ground. and we're able to recycle a lot of it. So, and we actually don't burn it. So there's this perception of it being the new oil, and it's probably not that simple. And it means that you're not really subject to the same sort of pinch points or vulnerabilities that you do with fossil fuels when it comes to trade, because you don't just suddenly have electricity prices spiking in France as a result of solar module imports being cut off. It doesn't quite happen in the same way as we've seen oil markets respond to much smaller fluctuations. We're blessed with this endowment of, in Australia, for example, all of these different minerals that are key to building out a lot of the clean energy equipment and technology that we want in the future. Fine. But actually, when you look at the volumes that those represent, and if you run scenarios and you look at some of the price points, pretty hard to match the levels of revenues that you're seeing with fossil fuels today, even in pretty optimistic scenarios for future critical raw material exports. And in some ways, that's a positive story, because although we're seeing, quite rightly, a lot of scrutiny being applied to different projects in various ecologically sensitive regions when it comes to, extracting lithium, for example. When you look at the actual volume of material being ripped out of the ground and transported, which represents an environmental cost at the site that you're doing it at, as well as a cost in terms of ferrying that around, it's much smaller than the equivalent sort of fossil fuel related costs. So in terms of the raw material being shunted around the world, we're actually going to reduce things substantially, and that's an important point too. But we have to be realistic about what that actually means in terms of moving from revenues linked to the trade of one kind of resource to something that's radically different.
And when you're looking at the critical mineral supply chain, are there emerging choke points that people aren't paying enough attention to?
If we talk about, we mentioned rare earths, and if we talk about rare earths, Chinese government has announced sort of export restrictions. I mean, it's not quite a ban. They sort of like saying they're requiring licenses for certain kinds of exports, which theoretically could amount to something resembling a ban. And then that could be tricky if it's applied to certain types of raw earth linked to making permanent magnets, for example. And that has not just military applications, but important to certain kinds of wind turbine and electric vehicles. You could have, certain governments regretting that they hadn't built up stockpiles or hadn't invested in strategic reserves or refining capacities of their own.
Are there success stories where there are countries that have been able to build out those kinds of resilient supply chains that are local that you'd highlight? You
have had some examples of governments building things out or beginning to, where the Indian government has a long history of protectionism, but has been making a pretty determined long-term bid, building out manufacturing capacity in various industries. And this has been a preoccupation of the Indian government for a long time. There's been this focus at building out the solar supply chain, from tariffs to sort of non-tariff barriers, like having a list of approved manufacturers for benefiting for certain subsidy schemes, to putting in place local content requirements for auctions. And where we've started to see not just module assembly, but more meaningful manufacturing also be announced. There's a lot of cell manufacturing that's been announced in India, and now interest increasingly even going upstream from that into the wafer and maybe even ingot space. So that can succeed if there is that stability over a long period of time. If you have a domestic market as big as India's, and if you're a country which is also being rewarded in some senses for not being China. And that's the case with India, and that's the positioning as well of some of these projects, even though most of what would be produced would be consumed domestically in theory. And that's why we've seen some excitement sort of over the last year with IPOs in India with linked to manufacturing and clean technology. So that's kind of a result of a number of factors. It's long-term policy, there's rising protectionism, and India benefiting from that as well, just from a global context. And there's also the fact that it's a pretty large market, and the fact that government policy for the years to come looks like it's going to remain quite stable. But that is a real exception. And it's an exception to the rule that you're competing in an environment where it's really tough if you're a mid-sized economy and you're still very much reliant on, on imports and expertise from outside your home country. So I think that's going to be the general conclusion to a lot of this, is that a lot of the successes that we might see are going to be in quite specific bits of the value chain, where you'll probably see some downstream manufacturing cropping up here and there. But actually having integration and having anything kind of like the scale and the sort of enmeshed nature of supply chains in mainland China is something that we're going to see sort of really quite rarely.
You talked about protectionism in India as actually being an advantage with this long-term strategy to them in this geopolitical context we're in. The protectionism that various countries are implementing now through the form of tariffs, can you talk about, there's a lot of confusion about whether that is good for the country's growth or is going to be horrible for the country's growth. Can you give your analyst perspective on that question?
Politicians love talking about tariffs. They love talking about jobs. They love talking about manufacturing. There's a real fetish around manufacturing over the last few years. There's a continuum between sort of openness and protection, defensiveness, and there's an enormous amount of trade-offs. And we're seeing all kinds of that story play out everywhere in the world at the moment. We're seeing, for example, in Brazil had this market, this EV market, where generally the accepted consensus was that it was a bit weird, where you had this transport sector that was very reliant on biofuels, where the electrification of the transport sector would be really stymied by that fact, and we'd see things progress much more slowly than in many other countries. And actually what we saw last year was an abrupt rise in imports of low-cost EVs from China, 90% increase in sales year on year of passenger EVs, and I think got to around 6.5% of sales. And as you know, in terms of penetration, that's getting towards what the US has. The US has much more in the way of state level and federal subsidies in place to facilitate that. So really shocking jump. And as a result, the Brazilian government's started to try and get Chinese manufacturers to set up shop in Brazil. And what we've been seeing, not just in the US, but in the EU, in Brazil, in Mexico, is policymakers trying to find tariff levels where politically that's feasible and that doesn't lead to, a sharp rise in tensions with China. But also at levels where in the EU, for example, you're still applying, setting tariffs at a level where there's still some pressure being applied on local manufacturers to up their game, and they're not completely shielded and coddled by that kind of protective barrier. And it's hard to get that balance right. So it really is up to policymakers to sort of decide, okay, am I serious about manufacturing locally? If I am I ready to make the trade-offs and to, put a lot of money into what is quite a fraught enterprise? Or is it, I'm going to prioritize decarbonization and electrification? And, in Pakistan, for example, made this choice last year where we saw this phenomenal boom in solar imports, getting to 14, 15 gigawatts in the first half of last year, which is just really unexpected. Where you basically had a manufacturing base that was really struggling with brownouts and blackouts and extremely bad quality of access to electricity and any kind of stability when it came to the grid. Suddenly having access to all of these solar modules and basically extremely low import barriers and a net metering program, which meant that you just saw just hockey stick growth in terms of deployment and it's speeding up. And those are real stark choices.
I want to pick up on the fetishization of manufacturing that you mentioned. I think that it's very politically in vogue to talk about it because the supply chains during the pandemic with inflation increasing really broke and people couldn't get the components they needed to build the projects or the products they wanted. And so the natural reaction to that was obviously let's build more close to home. Though with an AI-driven economy, if we are rebuilding manufacturing, won't that eventually be obviated by robotics and AI down the line? And so is this really a long-term strategy? Can you talk about the economic impact of onshoring manufacturing and whether that's just politically convenient to talk about right now or if that's real economic impact that will make people's lives better?
Manufacturing feels real in a way in which the service sector doesn't. That's why, when we look at trade deficits, there's a lot of numbers that just completely abstract services out of the picture. People still sort of deride the fact that we just don't make anything anymore. And that's a real focus because I think it just has these deep political roots. There's pretty much two issues where there's complete bipartisan support. It's making things in the US and it's being tough on China. And it's pretty hard to find consensus otherwise, but those are two real constants. But then that does lead to some risks. China's become the biggest importer of industrial robots over the last couple of years. And you look at the labor intensity of battery cell manufacturing or electric vehicle manufacturing, and it's quite low. You've got something like 60 to 90 jobs per gigawatt hour of battery cell manufacturing, which isn't much. So there is an absolute risk, and that's why I sort of made that initial point of saying that it's important to be clear about what the goals are. Is it to be self-sufficient? Is it to create lots of jobs that you can point at come election year? Is it to, just focus on economic value add? Because those aren't always aligned. And that's where, again, this idea of being clear about the trade-offs becomes really important.
Whether our listeners are founders or investors or policy wonks, where would you direct their attention? What should they be paying attention to in the next 12 to 24 months?
I would look at what Chinese manufacturers are doing and look at the products that they're offering, look at the announcements that they're making, and look at where they're expanding. Because in many ways, that's either a sign of the future or it's a mirror image of the tensions that we're seeing globally. So really looking at what companies are doing, not just focusing on policy. Understanding why BYD sees the US as uninvestable is important, just as sort of understanding why CATL is building out manufacturing in Hungary. And that teaches you a lot about the overall context. Following what's going on in China is not easy. A lot of stuff is just posted on WeChat in Chinese and it's not in English media. But just, I would say that that's a good use of your time if you're following this space.
Good advice. And thank you for unpacking all of this, the going from headlines and talking points from political heads to actual nuance and talking about the continuum. There's trade-offs. There's no simple answers or we would have fixed it already. It's very enlightening and I appreciate your time.
Thank you. It was a pleasure being here.